M&A and hope push futures higher. Eurozone leaders have 1 week to hammer out a plan to save Greece, recapitalize European banks, and decide the fate of sovereign bondholders. And Kinder Morgan buys El Paso for just over $20 billion, making a huge bet on natural gas. I'm Alex Steele, and the Morning Call starts right now.
Good morning. Scott Rella, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the Morning Call. It's Monday. We're going to get it out there. All right, Let's get to stocks here. So the S&P having a nice rally on Friday, closing above that 1220 pivotal level here. Can we really push higher, or are we going to hit some massive resistance now?
At this point, the McClellan oscillator is plus 82. That's very overbought. We can stay overbought for a period of time, but it's hard to add to positions when you get to that area of overbought nature. Plus, combine that with heavy resistance. So at this point, you have to be a bit more cautious. You know, we tried to connect the dots earlier. In the last 2 weeks, we've seen a very significant rally, a rally that's followed every technical rule that has kept us intact and constructive. So I would have rather have seen people put money to work at certain areas in the last week or two, not chasing the market up here at 1220, 1225, even though I do think we could see 1250 to 1300 at some point in the fourth quarter.
Well, then let's talk about what kind of pull-in we can expect and then look at the charts, because we have had rallies and slight pull-ins, but nothing really that dramatic. And Sam Stovall, the chief equity strategist at S&P Capital, said that he does expect to hit that resistance at 1230, pull back before making a run for that 1265 level. So let's see what kind of pull-in we can really brace ourselves for. Okay,
so let's take a quick look at the chart, and I'll show you exactly. If you look at what happened since we started, here was that outside day, here was a day to take notice when we broke below the range and came back above it and closed strong. This is the day the bears lost control. So you had quick 3 days, and look at this pull-in. Everyone thought we can have a pull-in, we're going to retest 1100. We held higher, we paused for a day, and then this was a nice entry when we broke this mini downtrend. And then from there, we continued to the upper end of the range, okay, and at that particular point, we had a small little pull-in, if you remember that Wednesday, you know, not much, or actually this was Thursday, and then Friday we powered to resistance. So at this point, we've seen very minor pullback. So if all of a sudden we failed in this area and we come back, I would say you watch 1190 as a key area, and then I do not think if this rally is going to be any good moving forward, we break below the 50-day moving average, which is around 1177. So that would be your line in the sand. If we do pull back there, which we haven't showed that we could pull back yet like that, which things can always change, that is where you want to map out and buy things back versus chasing up here, but stay long.
But some investors might be in a tricky spot if they miss this kind of rally here. You know, what do? You want to brace for some kind of pullback, but you also want to take advantage of another leg up if we see it, because there are going to be those fund managers who were hands off that 12-10% rally and don't want to miss out on the next one.
Well, that's when everything starts to really steamroll and chase. You have people that have to chase performance. You have people that said, you know, there were a lot of reasons why not to invest in this last rally. The only reasons I saw were technical. Fundamentally, everyone across the board was like, why are we doing it? Why are we rallying? I always said, don't look at the why, look at the how. The how can you get involved? How can you feel comfortable? How could you trade within your means? So at this point, if you missed the rally, don't just chase it up here, because if we do pull back, you're probably going to sell it, and that'll be the area to buy. And if you've been shorting this rally, you know, don't just continue to blindly short and blow up your account, because there are a lot of guys out there who fought this move and think we can't go higher, but we could always do what a lot of people think we can't do.
And then for those who paid attention to you want to take a little bit of profits on those 4 to 8 positions that you have long, right? And then maybe take a little bit of shorts on the spiders?
Yeah, and that's what I tried to do last week also. I did try and do a mini scalp short. It worked out, but I wasn't looking for much. I think if you're going to hold positions and you think we can go higher, have your 4 to 8 positions. I only have 2 now, and short some spiders against it. And right now, the VIX just pulled in huge. So if all of a sudden you have a big, massive portfolio, whether you're a hedge fund manager, or even if you have a lot of longs out there, maybe take some insurance, buy a little VIX. It just pulled in a lot. Make sure you feel comfortable. And that's the key, is being comfortable, and the key is knowing your time horizon and what you can handle. And right now, if you're a long-term investor and you held your macro tier 1, which we talked about, congratulations. If you added to positions based on chart patterns and cash flow, and because of this morning report, that you're doing a good job and you're learning how to maneuver the markets, because there's a lot of money out there that can be made. You just have to pay attention.
So pay attention to retail. That's what we want to kind of shine the sector spotlight on today. We had those positive retail sales for this September coming out at 1.1%. That's up over year, 8.6%. And many analyst reports that I was kind of looking at based on this number were saying, okay, so this is a non-recessionary number, obviously, but it is a slogging through. So we're not out of the woods, but we are in sort of a murky, dark forest, but there is a light somewhere. It's kind of my interpretation from that. So with the RTH up about 9% for October, I wonder if that good news is already priced in, or if you were looking at the chart, you see if it has another leg up.
Well, everyone always looks for alpha. During market corrections, I look for relative strength, and I know there was a lot of reasons why retail probably shouldn't have rallied, but it did. It held higher the entire way. If you take a quick look at the RTHs, you'll see that it never even attempted to make a new low. And we pointed this out all along the way. Here is the low from August. You saw the S&Ps come back down and break it. The Qs actually just matched it, and here this held higher, so that's why there was a lot of power here. So to me, this group, as long as it continues to stay above all these moving averages, you're seeing relative strength, and you're seeing individual stocks acting well, rewarding investors looking at the right technical pattern that shows relative strength.
Let's go to the individual stocks. We want to start off with the high end, like a Tiffany's and Coach. They're definitely the more expensive names in the group. Do they still offer any kind of value or trade at this level?
They both bounced well off the low. I looked at it. I think Coach's chart looks a little bit better than Tiffany. If you take a quick look at Coach, you will see here, it held higher, which I like, showing relative strength, and then it pushed through this recent resistance. So I would say, it's had a big move, but this stock is technically acting well as long as it stays above 59. I do think it's going to make an attempt to take out the prior resistance right there.
And I should say that the high end, like these guys, definitely is trading well off of China, and the hope that they won't slow as much and their emerging middle class will keep buying these high luxury, high-end goods. So, okay. Going to the U.S., though, let's look at like a Lulu and Under Armour. They're sort of like the specialty stores. I know that they're fun trading vehicles for you, so I want to see if they still are.
Lulu lost a little bit of its luster in the last month or so. It had a nice snapback, but I want to show you the pivot here on Lulu because it's coming into a crossroads. Stock, this is when we said you should be getting out of it when it technically broke down. It actually went through the August low, so it didn't show as much relative strength as it used to, and it's right back at resistance. I would say with a bit more time, it can get a little bit more constructive. I think, if you want to buy it versus the 50, and momentum will come in if it could start getting above 55. And as far as Under Armour, I think it's acting better. Under Armour, didn't make a new low. Look at the low from August. It held higher, and I do see somewhat of a descending channel here. So I know traders that are looking to get momentum, this thing starts to get above just say, 77, 50, 78. You could see a move to new highs pretty quick in that group.
All right, let's go to the low end, like a Costco and a Walmart. Is it too late to get involved in these names? Because if the consumer is going to slog through here, these could still have more room to run, but everybody already knew that they might be the ones that people will choose to slog through this economy. So, 50-50 here.
I think at this point they've had a move, but I think they go higher. Walmart, we were able to time Walmart, which is unbelievable for a stock that's done nothing. It broke a downtrend. That's why I show you all these patterns. Look at Walmart. We talked about it in Options Profits on that Thursday. This was that downtrend. It broke to the upside, held higher, showed relative strength above some moving averages, and now it's going sideways again. I'd say as long as it stays above this 54 area, you're going to see momentum stay here, and I do think this can make new highs. You're going to be seeing it in the media in the next month, saying, oh my goodness, Walmart at new highs in the year.
What about Costco? Let's look at the chart real quick if you can.
Let's take a quick look. I haven't heard a lot of talk about Costco, but it's actually acting okay. Held higher recently. It came in, didn't really have much of a bounce in the last 2 weeks, but it's acting well above the moving averages. I would say this thing could start to get a little frisky if it were to break above this recent high of 82 to 84. I think this is in the game. You could hold it, just don't get too excited.
Fair enough. And let's wrap up here with kind of the mid tier. The Macys, the JCPenney. It's like the rich is still spending on the high end. You have the middle class is going to spend on the Costco's and the Walmart. So where does this leave the mid tier?
I looked at both charts, and I think Macys looks better than JCPenney right now. If you take a quick look here, it just had a nice move. It held higher also. You look at the support, it held this 24 area, which a lot of people were buying against, and then it just broke above this recent resistance. So it's acting well. All it has is this, it's going to have a wall of resistance around 30, but this, I feel, will make new highs in the year before JCPenney's.
I have to say, whenever I look at the same store sales results for the month before, it's always Gap and JCPenney's that are the two that are like, man, you just cannot get into positive territory. So good to keep in mind. All right, we'll be right back with how to play earnings and the stocks that are looking good and more quick ways to make some cash right after this.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as this market's concerned, we got to take off those glasses.
All right, we're going to get in the trenches here with how to trade earnings. Scott, let's take a look back real quick on JP Morgan and Google, sort of two diametrically opposed earnings results. How would you be trading these stocks after the fact?
I think both had very different expectations, and there's an art to playing earnings. You need to see where your stock was, how it rallied or not rallied going into earnings, and then figure out what it needs to happen or what needs to happen in order to get a pop or whether it's priced in. JP Morgan had a big move from about 28 to almost 34. So into earnings, you figured a lukewarm report like we saw, it would be priced in and trade down, but then you look to buy that dip, and on JP Morgan real quickly, it held in okay. I talked about this. Here was the move from 28 to about 34, and I said as long as it stays above this 30 area and goes sideways, that's decent action for a bank. So I continue with my thesis there. As long as it stays above 30, you could stay invested in JP Morgan. If it starts to get above this 33.40, you could have continuation. But then on the flip side,
Google almost hitting $600 on Friday. Crazy move.
Yeah, and it actually, after the earnings gap, there wasn't that much opportunity. In the virtual trade floor we talked about, we took a little bit of a shot. We bought the 580 calls, or at least I did. Some guys rode the coattails, and then you traded it after hours. But it opened up around 595 and did nothing. So now what I like to do is see continuation to that move. So you want to draw parameters on what happens if it gets above here. How do you make an additional trade? So if you look at Google real quickly, you'll see, big gap up, but it didn't get much traction after the gap up because look where it came from. Remember this area? We were on actually options profits when they got long around here, pretty good. And now what you want to do is you want to trade against the gap. Know where the beginning of the gap is. Some guys, if it starts to trade below 587, they're going to short it a little bit, and maybe it comes and tries to fill a bit because everyone remembers, look what happened last time at earnings. Went up, boom, and then filled the gap and went nowhere. So you have to figure out if that's going to change. So right here, I would say watch this low. Okay, and then if it starts to finally consolidate and get above this 599.60, that's when momentum traders will buy it for a move to retest the highs that we saw back here in late July.
And then so my next question is, in a derivative play, how would you be looking at, say, the Goldman Sachs and Morgan Stanleys of the world who are reporting Tuesday and Wednesday of this week, and sort of use JP Morgan's earnings to kind of understand how to trade these stocks?
Well, if Goldman Sachs hangs out here and doesn't pull in, okay, it just absorbed the move off the lows. So maybe if they come in line or a little bit better, it could actually pop and hold it. So if you look here on Goldman Sachs, you will see, it also had a move off the lows, right? This was the first move, and unfortunately banks don't give you more than that lately. Then you have this downtrend that it tried to poke its head above before JP Morgan. And now I would say I'd like to see it go sideways. I'd like to see it hold here. And then if it goes sideways and continue to absorb this and come out with a decent result, I think you see 105, 110 in a flash. And then, he will even call me crazy, but Goldman Sachs at some point this year could almost hit 120.
Wow. Okay.
That's
a pretty
crazy.
bold bet, yeah.
We'll see.
And then Morgan Stanley, because of course it got hammered with its worries about exposure to European sovereign debt.
Morgan Stanley, the expectations there are so low. People think that they're the next big problem spot, and I've seen a move off the lows. So if, again, it holds higher, which it's looking to try and do, all these charts look the same. You had that Tuesday low, so the banks participated, haven't really done much since, holding higher. This isn't a bad place to hold. Hasn't given back more than a third of what that move was, but it's going to really have to start getting above, I'd say, 16 to see some kind of traction. So if they come out with anything in line, a little bit of positive, anything positive, and I think 18 to 20, just like that.
All right, let's go to Halliburton. Reported this morning before the bell, popped 7% into the earnings on Friday, beat on the top and bottom line. Let's take a look at the chart and see how you'll be trading it after.
This will be interesting because the OAHs in that group just had a huge move off the lows, and it snapped back fast and furious. And if this report is that good and it opens up, we'll see if they sell it because of the move that just happened. So you have to know if it's priced in. Some guys might look to short this off the open, but just be a bit careful. If you look at Halliburton, this thing was less than 30 2 weeks ago and closed on the highs at 37, opening up into resistance. It'll be interesting to see if it gets any traction. I personally think it's going to be hard to buy after the open, but it's also going to be tough to short. But let's look to see how it acts, to see if other companies have the same type of earnings priced in here.
Fair enough. And then two stocks reporting after the bell. We got IBM and Intuitive Surgical. I know you don't take earnings into the print, but what about the day trade?
Well, IBM is at new highs. It's been one of the chosen ones. Congratulations if you're an investor. You actually could have invested in something and consistently made money besides just cash flow, which has been what's been going on, trading these ranges. IBM, they're pricing in a massive report. I would have loved for you guys to get involved when it broke this downtrend right here, or look how it held higher. You have a low, higher low, higher low, higher low, nice trend, and now it's extending. So if you have a long-term thesis in IBM, just sit and hold. If you're a trader, some guys are probably going to, if we get a pop, they're probably going to look to short it because it's going to be somewhat priced in and need a rest. The stock's very overbought right here.
All right, fair enough. Let's go to some quick ways to make some cash. We have a lot of stocks and not a lot of time. VMware reports after the close. What are the key levels you're going to be looking at?
I think it just had a big move. I would stay away from VMW unless you're an investor. If you're an investor, stay with it. If a trader, it's been very tricky.
Amazon making new highs on Friday. Obviously too late to chase?
That's a tricky one also. New highs going into earnings. I think that the earnings are going to be good. I'd love to see a split. It's going to be what happens after. I think Amazon, we gave you a lot of entries at this point. You know, I wouldn't want to see you chase. You had an entry right here at that 210 level. Then you had it again when it broke this mini downtrend, and now at new highs. It's very tricky just to initiate a new position up here.
And what about Apple reporting after the close on Tuesday? The big news, of course, the iPhone 4S coming online. How are you trading?
Well, I'm long Apple.
Okay,
I've always tend to try and be long. I'm long coming into today. I have in-the-money options, which I'm going to keep into earnings because I have defined risk. I probably won't take the stock. But if you're an investor, not a trader, stay with the stock, stay long-term. It looks great. It's still leading. Their products are unbelievable. Stay the course.
And two component stocks like a Qualcomm and a TriQuint Semi are both in the guts of the iPhone. But Qualcomm had a nice boost on Friday, while TriQuint was down almost 3%. So is there a pair trade or something you could do off of these two?
Well, Qualcomm is just an institutional favorite, acting very well. Another chosen stock that looks good. TriQuint is something that just came back on the radar because they're supposed to be in the new iPhone. So if you look here on TriQuint, you'll see that it had a nice move. You know, it had a very big igniting bar. So if you look here, this was the level that I guess people got excited about when it went above 6. So I know it was down Friday, but no big deal. If you look, it was below 5, went almost into resistance at 8. I would say if this TriQuint holds above this, just say, I would say 7-ish and stays above and goes sideways, there could be another nice little trade once it starts to clear this 8, and it could fill this gap all the way up to the 9 and change. So it's back in the game. Just don't overpay for it.
All right, and LinkedIn, want to get to this stock, and if there's a good trade after the big run-up we saw.
I've had it on the price point sheet 3 times last week. It's had 3 big days. It's coming into resistance around 90. I do think it's in the game. You just need the right price, and it just had a move, so let it digest. All
right, fair enough. And then Kinder Morgan, you know, buying El Paso today. Is there any trade that you guys take when there's a big M&A move?
You look at the sector,
right.
And unfortunately, I don't trade the natural gas sector or a lot of stocks in that sector. So I'm just encouraged that there's M&A activity, that people think that paper is cheap, so that could help fuel the rally and keep the rally going and broaden it, because you can't just have a rally on retail and tech. So it would be nice to see the groups that came off the low, like the industrials and the refiners, start to gain traction with these type of M&A mergers in order to keep commitment to the buying, so you can feel comfortable being a little longer versus just renting the stocks.
Fair enough. It's an interesting way of looking at it. It's not necessarily a trade, but it's a good macro perspective on the stock market. That's not dirty Europe.
Right.
There we go.
Or the Occupy Wall Streeters.
There you go. All right. Well, that's it for us for today. Happy trading, everybody. I'm Alex from the street.
And I'm Scott from T3. Make sure to follow us on the virtual trade floor or in the chat. And if you missed that, we'll catch the recap. We'll go over what worked and what didn't and give you a little sneaky peek into tomorrow's action.